Hi, Matt McAleer, President, Director of Private Wealth, Cumberland Advisors, April 25th with John Mousseau, the Moose. Well, quickly, it was a decent week for equities and for fixed income. But let's back.
But it sure as heck didn't start out that way.
Let's back into some of that information. And what we try to build is a week by week transparent report on what we're thinking, what we're seeing, how we're handling that within portfolios. So let's go back to last Thursday. Keep in mind, it was Good Friday, markets were closed. We did this last Thursday. Market had had a couple of decent days in a row and felt like it had pretty good footing under it. And of course, there was trade and tariff headlines over the weekend. Market opens down steep on Monday. I have to tell you, that caught me by surprise. I was coming into this week, and if you recall last week, I said, last week we got just what we needed. Right. Backing and filling to digest the previous week's big rebound.
Right.
And I thought we could get some backing and filling again. That 2.5–3% drop Monday morning, I wasn't expecting that.
Bit of a gut wrencher.
It really was. But in retrospect, and everything's clear in the rearview mirror, nice buying opportunity. We didn't do any buying on Monday. The way we've worked within our portfolios over the last 8 weeks, and I think we've done it reasonably well, is to try to push chips into the game
right.
at different levels, not ringing the bell all at one level. And just to review, to let you know where we sit right now, almost as a synopsis of our last couple of months of conversation in this fairly volatile period, over in tactical trend, as markets fell, we created a larger position in banks and broker-dealers. That trade's doing well. Over in US ETF, we've been buffeted, knocked around a little bit here and there. We extended our allocation in tech, some a little too early, some right on time. Today we added to our cybersecurity position. CIBR is the ETF. One of the reasons our thought process on cybersecurity is, and this may be far-fetched, you have much less supply line trouble in software and cybersecurity software than you do in, say, chips.
Oh, absolutely.
That you have to ship. And listen, the market understands that, and the markets are making chips trade at a discount to software. So you are, to some extent, being compensated to buy chips. For the time being, we've been long software, added to it. Over in international, we added to Euro 30 last week. So as we've gotten volatility, we've been adding. We'll continue to do that. In terms of our breakdown in our U.S. portfolios, we're about 50% growth, 50% value. Remember, value is such an overused term, but within ETFs, they do break down by different filters.
Right.
Over in tactical trend, where we own individual securities, I like to say value is mispricing.
Right.
Value can be growth. Value can be dividend paying. Value can be international. Value can be commodities. Value is mispricing.
Right. Underpriced.
Right. The market's mispricing something, you make a move. So we still continue to have some cash in tactical trend. That's a multi-asset approach to the markets. And listen, it's doing its job. It's up on the year, right? We're up on the year, have worked our way through volatility. International, up on the year. Those are nice areas to have an allocation to, and it gets back to what I mentioned a couple of weeks ago. For the last 2 or 3 years, diversification, which has a whole bunch of letters, was a 4-letter word. You wanted to not be diversified.
Because you didn't have enough tech.
That's right. You didn't have enough tech. You didn't have enough large cap growth. That has changed over the last 3-4 months. It'll be interesting to see on the back of this week, John, where growth got a bid again.
Right.
If we've seen what we have the last really 5, 6, 7 years, and that is value International gets a little lift,
Right.
and then bam, growth takes back over. We'll look. We're not going to try to predict that. That's a fool's errand. We'll stay flexible, and we'll be reactive.
No, I mean, that's a perfect approach.
Yeah, and again, we talk about this all the time. It's not the headlines. It's how the market reacts to the headlines. And how the market reacts to the headlines is purely positioning. Are people too long? Are people too short or too much in cash?
Right.
And you see that where you may notice a tariff headline that 3 weeks ago would have sent the market down 5%, and it's kind of ignored today.
Because it's old news.
Older and priced into some
Right.
certain levels. So, hey, next week the volatility is not going away. 2025, I believe, will remain volatile. Historically, if the first 4 months of the year were flat or down, doesn't mean the year
Right.
finishes down, the year remains volatile.
Yes.
So we'll take a look. We've got some cash left. We'll be judicious. How about in bonds, Moose?
A quieter week. Yields down, but doesn't tell the whole story, like you said. 10-year Treasury last Friday or last Thursday was a 433. As we sit here, it's a 427, down 6 basis points. 30-year Treasury was a 480 down to a 473, 7 basis points. However, on Monday, that 10-year Treasury amount was up above a 440 during that 3% down carnage in the equity markets.
Right.
What did that represent? That represented yet another hurdle for the markets, and that was the president talking about firing Jay Powell.
Right.
In other words, the buffeting of the tariffs had gone away. Now we had a new buffeting. So this was taking over. And as we talked about, in the beginning, sometimes policy dictates markets, but it isn't for long when the markets dictate policy. And that's what happened here. You saw a day later, the president pulled back, said, not never mind, but he goes, I'm not thinking of really firing Jay Powell. And, the markets, one person's comment turns around a whole market.
It's amazing.
And muni bonds, which really were flat for the week, so 344 on the 10-year AAA kind of stayed the same. But remember, that was, 40 basis points higher a few weeks ago. And muni bonds had gotten tagged by the taxation stories, which we've talked about here. That's gone away. Then they got talked about the tariff situations, which hurt all bonds, because remember, the tariff situation was, tariffs are inflationary. That's even as we've had a drop in inflation.
Right.
With both PPI and CPI
Right.
earlier this month. And, so that inflation's down, but inflation expectations higher, hurt bonds. Once he took away some of the tariff stuff and put the moratoriums on, that relaxed a little bit. The last buffer was the Jay Powell talks. We have one graph to show you here, and we've had it before. It's the muni feast and famine chart. Shows you all the different things that have distressed munis over the last 16 years. This is just one more of them. And they're all marked by yields going up almost in a vacuum, yields rising at an increasing rate, and they've all been great opportunities to add a little bit of duration and keep some higher yields.
Lock in some
higher yields that you haven't been to, because the dealer community is fragile. Doesn't take much to say, the heck with it. In this case, they couldn't hedge anything, so they just kind of gave away the merchandise and cut their bid. You got to take advantage of some of that.
Yeah, well, nicely done, Moose. Yeah, and in terms of your own portfolios, if each day's action makes you think, I have too much exposure, and then the next day I don't have enough exposure. If you're bouncing from side to side in trying to manage your portfolios, it probably means that you've gotten yourself too emotionally involved in the portfolios. So if there's some thoughts, some ideas you want to, we're happy to share ours. If you want to reach out, let us review, be happy to.
You don't want to be bouncing off the bowling lane sides.
Hey, these are tough days in terms of headlines, and headlines move markets short term. But just as we said, it's funny, John, about 4 weeks ago on our thing, we said short term politics can run the markets around. Long term, markets control politics.
And you're seeing that
Don't
now.
ever lose sight of that. Enjoy the weekend. We'll see you next Friday.